Okay, so today I'm going to be talking about technical indicators. We've done this brief topic before, but I'll go a bit more in depth into it, and we'll go through showing you what indicators mainly people use. So, as per standard, I've got to read you a general advice disclaimer. This information on FXC website and webinar is general in nature and does not take into account your personal circumstances, financial needs, or objectives. Before acting on any information, you should consider the appropriateness of it, the relative product, having regard to your objectives, financial situation, and needs. In particular, you should seek independent financial advice and read the relevant product disclosure statements or other offer documents prior to acquiring a financial product. So welcome again, and why listen to me? Well, I'm a member of many Forex societies, and I've been trading the markets for over 12 years now. I've traded with many professional traders and firms and others for the past 6 years. I've traded for major banks and financial institutions. I've taken their lessons and been able to piece together some constantly profitable strategies for you. I believe in this type of market people need education, and they ask for this. This is one of the reasons why I do it. So I'm happy here to help teach you guys, and I've got a gift in teaching and tuitioning you. I love helping teaching people. I've had great success throughout my life, not just in Forex, but in teaching people throughout my ways in life as well. So let's talk indicators. What are indicators? What are the three most commonly used indicators? Now, we say the three most commonly used. We've got MACD, RSI, and channels. And I've got a fourth one now added on, which is a moving average. And I want to show you how a moving average works as well. So there are three most commonly used, and the fourth one I would say is what I use, quite common. So technical analysis. Technical analysis is a framework in which traders study the price movement. The theory is that a price can look at historical price movements and determine the current trading conditions and potential price movement. The main evidence for using technical analysis is that theoretically all current market information is reflected in the price. If price reflects all the information that is out there, then the price action is all one would really need to make a trade. Now, have you ever heard the old saying, history tends to repeat itself? Well, that's basically what technical analysis is. It's all about history. If a price level held a key support or resistance in the past, traders will keep an eye out for that and base their trades around that historical price level. Last week we discussed Fibonacci's, and that's one of the reasons why it's a price level. Technical analysts look for similar patterns that have formed in the past and will form trade ideas believing that the price will act the same way that it did. In the world of trading, when someone says technical analysis, the first thing that comes to mind is a chart. Technical analysts use charts because they are the easiest way to visualize historical data. You can look at past data to help you spot trends and patterns, which could help you find some great trading opportunities. What's more is that with all traders who rely on technical analysis out there, these price patterns and indicators signal tends to become self-fulfilling. As more and more traders look for certain price levels and chart patterns, the more likely that these patterns will manifest themselves in the markets. Okay, so let's talk MACD. We've got a MACD here. We've got a MACD here with a histogram. And we've all seen this, and we'll pull it up on an MT4 chart very shortly as well. And that way you'll be able to see exactly what's happening in the and how we actually use a MACD. So first of all, I want to explain to you what a MACD is and how we use it to benefit ourselves in trading, because it is a tool that you will require as a trader, I believe. Okay. Alright, so a MACD is an acronym meaning moving average, convergence and divergence. This tool is used to identify moving averages that are indicating a new trend, whether it's bullish or bearish. After all, our top priority in trading is being able to find a trend, because this is where the most money is made. With a MACD chart, you will usually see three numbers that are used for its settings. The first number of periods, that is used to calculate the faster moving average. The second number is for periods, that is used the slower moving average. And the third number is bars. This is to calculate the moving average of the difference between the faster and the slower moving average. For example, normally we see 12, 26, 9 as the MACD parameters, which is usually the default setting for most charting packages in MT4. This is how you would interpret it. The 12 represents the previous 12 bars of the faster moving average. The 26 represents the previous 26 bars of the slower moving average. The 9 represents the previous 9 bars of the difference between the two moving averages. This is plotted by vertical lines called a histogram. They're the green lines on the chart that you're seeing now. There's a common misconception when it comes to the lines of a MACD. The two lines that are drawn are not moving averages of the price. Remember that. Instead, they are moving averages of the difference between the two moving averages. In my example, the faster moving average is a moving average of the difference between the 12 and the 26 period moving average. The slower moving average plots the averages of the previous MACD line. Once again, from our example, this would be a 9-period moving average. This means that we are taking the average of 9 periods of the faster MACD line and plotted it as our slower moving average. The smoothness of the original line and even more gives us more accurate. So I just want to highlight a quick point to you guys. Okay. So I just want to show you just a quick drawing on how it looks. So this is your moving average, obviously. I'm using the green pen here today. I can switch colors to a, how about we use a color we don't have. I'll go purple. Okay. So this is a moving average that we're using today, and we can see that in our moving average that you got a red line and you got a blue line, and I will explain what the red line and the blue line does mean, and how we use the red and blue line. They're usually called crossover points. When you see the blue line cross over the red, it signals a buy period, and then it becomes a short period. It's good to use this with a 1 hour to 4 hour chart and trading a good nice length. But I'll get back onto this. Alright, so here's a crossover that I was going to discuss. Because there are two moving averages with different speeds, the faster one will obviously be the quicker to react to the price movement than the slower one. With the new trends occur, the fast line will react first and eventually cross the slower line. When this crossover occurs and the fast line starts to diverge, that's why it's called a diverge in MACD, or move away from the slower line, it often indicates that a new trend has formed. This is because the difference in the lines at the time of the cross is zero. Zero meaning even. That's where the histogram is. You can see positive histogram here, and you can see negative. This in the middle is zero. As a downtrend begins and the fast line diverges away from the slow line, the histogram gets bigger, which is good indication of a strong trend. Let's take a look at this example. The Euro-USD 1 hour chart that you're watching, the fast line crossed above the slow line while the histogram disappeared, suggested that the brief downtrend would eventually reverse. From the Euro-USD began shooting up as it started a new uptrend. Imagine if you went long after the crossover. You'd have gained almost 200 pips. That's this crossover here. The histogram aligned as well. Okay. There's one drawback to a MACD. Naturally, moving averages tend to lag behind price. After all, it's just an average of historical prices. Since the MACD represents a moving average of other moving averages and is smoothed out by another moving average, you can imagine that it's quite a bit of lag. However, a MACD is still one of the most favorite tools used by traders. So do you have any questions in regards to that? Any questions in regards to? No questions in regards to the MACD? Okay, no worries. I'll go to the next one. So relative strength index. Okay. Relative strength index, or RSI as we know it today, identifies overbought and oversold conditions in the market. Remember guys, we can get all these indicators on our MT4 platform and we can definitely use it. And I'll show you how to pull them up as well. Now the relative strength index identifies overbought, oversold and the conditions in the market. It is also scaled 0 to 100. Typically reading below 30 indicates oversold. So this is a below 30 line indicating oversold. While readings over 70 indicates overbought. So 70, 30. You will see this on your MT4. Okay. Now I want to show you how to use an RSI in trading. Here we go. My nice black arrow there. RSIs can be used just like the MACD. When can you use it to pick a potential tops and bottoms depending on whether the market is overbought or oversold? What you're watching now is a 4-hour chart of Euro USD. Euro USD has been dropping the week, falling about 400 pips from the over the course of the 2 weeks. This is an old chart, by the way, guys. It was already trading below the 1200 handle. However, RSI dropped below 30, signaling that there might be no more sales left in the market and the move could be over. So we're looking for a reversal. So then the price reversed and headed back up over the next couple of weeks. So what you're seeing here, the RSI dropped below the 30, meaning it's oversold. So the buyers are back in, and that's what you're seeing here, this uptrend. I'm also going to show you how a channel is used shortly, and you'll see that you can build channels in there and in here as well. A channel is exactly what I drew then, 2 straight vertical lines that the price bounces in between. In this example, I just want to let you know that there is an oversold position here. That's where you're seeing that. And there's oversolds. There's another one here. Looks like it's occurring as well. Another one here as well. Okay. So now I want to show you. I want to show you how to use the trend using an RSI. RSI is a very popular tool because it can be also used to confirm the trends and formations. If you think a trend is forming, take a quick look at the RSI. Look at whether it is above or below 50. Now we discussed before that we have 70 and we have 30 and 50. Okay, above or below 50 tells us what's going on with the trend, if it's a downtrend or if the uptrend is occurring. If you're looking at a possible uptrend, then make sure the RSI is above 50. If you're looking at a possible downtrend, then make sure the RSI is below 50. So as a downtrend occurs here, we've got to ensure that the RSI is below 50. In the beginning of the chart, we can see that a possible downtrend was forming. To avoid fake outs, we can wait for the RSI to cross below 50 to confirm our trend. So it's telling us how a trend is, and it's confirming it for us. Sure enough, as the RSI passes below 50, it's a good confirmation that a downtrend has actually formed. Okay, so now I'll be discussing channels and how channels actually work. If we take this trend line in theory one step further and draw a parallel line at the same angle, or up the trend or downtrend, we'll create a thing called a channel. No, we're not talking about TV channels, we're talking about Forex channels. Still, this doesn't mean you walk away like it's a commercial break. Channels are just another tool in technical analysis which can be used to determine good places to buy or sell. Both the tops and bottoms of a channel represents potential areas of support or resistance. To create an up channel, which is called ascending channel, simply draw a parallel line at the same angle as an uptrend line and then move that line into position. So simple, you have to draw two lines within the price. Make sure this they're level. Okay. Another thing, don't have to worry too much about drawing lines with channels. With MT4, you've actually got a channel tool, and you can use that, and I'll show you how to use that channel tool. I'll make a quick note here with the little star button. To create a downtrend, which is called descending channel, simply draw a parallel line at the same angle as the downtrend line and then move that line to a position where it touches the most recent valley. This should be done at the same time you create the trend line. When prices hit the bottom of a trend line, this may be used as a buying area. When prices hit the upper trend line, this may be used as a selling area. Now there are three types of channels. There's ascending channel, higher highs and higher lows, and there's descending channel, lower highs and lower lows. And it's horizontal, which is called ranging. So they're the sideways ones, they're the ranging channels. They're the up channels, and they're the down channels. Now what I'm going to do is I'm going to show you my MT4 platform, and we're going to go through a few of these channels. Just loading up my MT4 now. And here we are. Okay, so here's an MT4 trading platform. The first thing I'm going to show you is just a plain chart that we have here. Okay, plain chart, red meaning bearish, green meaning bullish obviously. It's a Euro USD chart on a 15-minute here. And what I want to show you is how we use a MACD. So here's a standard MACD, 12, 26 and 9. Okay, we can make it a bit, we'll make it a bit thicker so we can actually see the what's going on. And there's our MACD. We don't actually see a crossover. All we're seeing here is a trend. Standard default with MT4, that is. We're seeing a trend, but we're seeing the reversal here with the histogram. And this has been 0, as we discussed. So we're still seeing the trend reversal. The other thing I said at the start was it's important that there were three main indicators. There's also another indicator that many of you would know that I use, which is my own indicator. It's a moving average. And why I say my own indicator, because I've played around with the numbers. So practically I drop a moving average on. I can leave one on 21 if I like, and I can leave it yellow, and I can put another moving average on. Just drag and drop another moving average and put the other one at 9. We'll change the color to Let's go light sky blue, and there we go. When I see that the yellow has, when I see the blue cross the yellow over here, I see that a downtrend has occurred. If I confirm it with the MACD, I still know that the downtrend has occurred. And then I can add on another tool to this, and the other tool that I can add on is a RSI, Relative Strength Index, which we discussed as well. The Relative Strength Index shows us if it's below 30, above 70, and how strong this pair is. As you can see, we have 30 over here, 100 being the top, and 70 over here. We can see that at this point it's oversold, and definitely oversold here at this point of time. Okay. Now this moving average that I create, I didn't really create a moving average, but the formula that I used, which is 21 and 9, I look for crossovers, and then I can also determine when the histogram meets on the MACD, and I can also see if it's overbought or oversold. If this being 50 is being center here, let's say 50, and I still see downtrend and it's not oversold yet, then, and I see this thing here occur, this crossover, then definitely it's still short for me on a 15-minute chart. So usually I'll put a stop loss of about 20 pips and put a trailing profit of about 10 pips using this type of strategy where they're all in line together. The other thing I wanted to show you was we talked about RSIs, we talked about MACD, and the third thing I wanted to show you was a channel and where the channel tool actually is. Channel tool simply up here on your MT4 platform, and how it works is you simply click it and you can draw a channel. So you know that's a downtrend. Just to make things easier for you, you can see that this is a horizontal channel where it's just, alright, ignore that one. This one here, we can see that it's just ranging. It's ranging, it's pretty flat. So, but we've had a breakout, looks like it's broken out and has dropped below that. Usually when you see a breakout below the channel lines, that's classified as a breakthrough, and usually you see further downtrends occur. So that's what we have for today in regards to the technical indicators. There's another indicator that you can also use, which is called Fibonacci. We discussed that last week, where you pick the top high to the bottom, and you can see that 38 is a key entry, and 50 is a key level point, and we can see that we're far from that at the moment for a retracement. Does anyone have any other questions in regards to indicators and charting for today? Any questions? I can't really see questions on this Goju meeting. Okay, I got a question from a person on the phone here who's asked me about Fibonacci and why we've used it. Why is it in the presentation when it wasn't in the presentation previously? Yeah, okay. The question that I've got from the viewer, that's the person on the phone, was that why have I spoken about Fibonacci when it wasn't in the presentation, and the reason why was we discussed it last week, and I just wanted to let the guys know that there was another tool that we can use, part of the Fibonacci, that we can add on to the chart. Okay. So this is what we have for technical indicators. I'll have the open to discussion now, and we can all have a chat about what's going on in the current market and the indicators.